Welcome back to V2U Research, your trusted source for daily Australian stock market insights and advisory. I'm your host, and today we're breaking down a pivotal session for the ASX 200 as we hit Tuesday, April 14th, 2026. The S&P ASX 200 index showed impressive resilience today, closing at 8,970.80 points. This represents a solid gain of 44.80 points, or 0.5%. Effectively halting two consecutive sessions of losses. Volume was notably healthy today, coming in slightly above the 30-day average. This suggests that the 0.5% gain wasn't just a technical bounce, but was backed by genuine institutional buying interest. If we zoom out to the last 5 days, the momentum is even more striking. The index has surged by 2.77% in a week, indicating a strong appetite for Australian equities despite global volatility. We are now sitting just 2.52% below our 52-week high. For many investors, this proximity acts as a psychological magnet, often preceding a breakout if volume remains supportive. In technical analysis, nearing a 52-week high often forms an ascending triangle or a cup and handle pattern. If we clear the 9,200 level with conviction, we could see a fresh wave of FOMO, fear of missing out, driving the market even higher. Today's local strength was underpinned by a significant rally on Wall Street overnight. U.S. markets climbed on renewed hopes for a diplomatic resolution to the Middle East conflict. However, it's a complex picture. While hope for peace is driving sentiment, the U.S. has simultaneously blocked Iranian ports following a collapse in recent peace talks, adding a layer of trade tension to the mix. Let's pivot to the technicals. At V2U Research, we look beyond the surface numbers to understand the underlying structure of the market move. From a technical perspective, the index continues to hold firmly above the critical support zone near 8,579.5. This level is proving to be a floor for the current bullish cycle. Looking upward, the next major hurdle is located around 9,200.9. This is the near-term resistance that bulls need to flip into support to unlock the next leg of this rally. The 14-day Relative Strength Index, or RSI, is currently reading approximately 61.90. This indicates strong bullish momentum without yet being in overbought territory, which typically starts at 70. For those of you tracking momentum strategies, an RSI in the 60s suggests that the current trend has strength, but as an advisor, we recommend watching for any sharp divergences at the resistance line. It was a tale of two markets within the sectors today. While the index was up, only 6 of the 11 sectors actually finished higher, showing a high degree of selectivity. Information technology was the undisputed heavyweight champion today, surging a massive 3.35%. This is a significant catch-up move for the sector. Despite today's brilliance, the tech sector is actually little changed over the last 5 days. Investors seem to be rotating back into growth names after a period of consolidation. The materials sector also provided heavy lifting, gaining 1.82%. Strength in base metal prices and optimistic demand forecasts from Asia helped drive the resource giants higher. Real estate investment trusts, or A-REITs, added 1.29%. We're seeing a renewed interest in yield-sensitive sectors as the market prices in potential interest rate stability. Not every sector joined the party. On the downside, industrials was the weakest performing sector, correcting by 0.76%, followed by a 0.51% dip in consumer discretionary. Let's look at the individual stories that moved the needle today. There were some truly explosive moves in the mid-cap and speculative spaces. IPERIONX Limited stole the show, rising 10.27%. The market continues to react positively to their sustainable titanium production milestones and recent contract rumors. Deep Yellow Limited also caught a massive tailwind, gaining 9.03%. The broader uranium thesis remains a key pillar for energy-focused investors this quarter. At V2U, we've been tracking the uranium bull cycle closely. With global decarbonization goals and a widening supply deficit, companies like Deep Yellow are increasingly seen as strategic long-term plays. Among the decliners, GQG Partners faced selling pressure, dropping 3.95%. Asset managers can be sensitive to rapid shifts in institutional sentiment, which we saw today. Online furniture retailer Temple & Webster also saw a correction, falling 3.55%. Investors may be taking profits after a recent run in the e-commerce space. Looking ahead, the volatility isn't over. Market participants are now shifting their focus toward critical data coming out of the United States. The The big one to watch is the U.S. Producer Price Index, or PPI, year-over-year data. This is a vital piece of the inflation puzzle that every ASX investor needs to understand. PPI measures the change in the price of goods sold by manufacturers. Think of it as inflation at the factory level, before it ever reaches the store shelves. Because manufacturer costs are usually passed on to the consumer, PPI is a leading indicator. If PPI rises, consumer price inflation, or CPI, often follows soon after. Furthermore, this data directly impacts the AUD-USD exchange rate. A higher than expected PPI could strengthen the US dollar, potentially putting pressure on the Australian dollar and our export sectors. For Australian investors, high US PPI data could mean higher for longer interest rates globally, which would weigh on the growth stocks we saw performing so well today. At V2U Research, we emphasize that while the trend is your friend, managing risk is your primary job. Ensure your stop losses are in place as we approach these resistance levels. Our mission at V2U Research is to provide you with the same institutional-grade analysis that the pros use. We believe that better data leads to better trading decisions for every Australian investor. If you found this market wrap useful, please like the video and subscribe to V2U Research. We provide regular updates to help you trade with confidence. Share your stock watch list in the comments. We want to know which ASX stocks you're tracking. Thank you for watching, trade responsibly, and we'll see you in the next update.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.